Today, we're talking all about Roku stock. Now, you might think from its name that this is a secret unlockable character in the Street Fighter video game series, and you'd actually be somewhat in the right ballpark, as the origin of the name Roku comes from founder Anthony Wood, who started his sixth company and decided to use the Japanese name for the number 6, or Roku. He should have maybe just named the company Fire, because this stock has been on absolute fire for quite some time. It's up over 250% in just 1 year, and there's no signs of slowing down. This is one of the largest positions in Cathie Wood's Ark portfolio, and when Cathie talks, you listen. If you like finding out about stocks that have massive upside, make sure you hit that like button and subscribe to the channel to keep in touch. At this point, I assume most of you have either seen a Roku device either at your own home or at a friend's or family's home. This basically allows for a quick setup to be able to watch TV via streaming or have access to Netflix and other popular streaming apps like Hulu, Amazon Prime, or Spotify. Gone are the days where cable companies dictate what you watch and when you watch it. Oh, and Roku makes this much more affordable. Roku also allows for you to be able to sync with your cable provider if you still desire to have it. Though I found this quite funny is that Roku on its website actually has a whole how-to section dedicated for how to actually cancel your cable subscription. It even includes a part about prepare for a pushback and the tactics that service providers will try to throw at you to keep your subscription with them. Rokus easily connect to TVs via HDMI ports, and once a Roku account is registered, it allows one to be able to buy, rent movies, and a whole lot of other features. There is no monthly equipment rental fees with Roku, just connect to your internet and start watching. Some channels are free using your TV's built-in home antenna. Now, how much does this contraption possibly cost? $300? Nope. Try just $29.99 for the cheapest option. That's a one-time payment to get access to the device and the multi-purpose remote. Of course, you have to still pay for Netflix and Spotify's every month, but that's not necessarily how Roku makes its money. Instead, if a viewer watches Netflix via the Roku system, it then is able to get a small portion of that monthly subscription revenue from Netflix. This is quite the genius business model, simply being the middleman that connects the two and getting a small commission. Roku in its own way is becoming like an app store, and it doesn't need to produce content like Netflix or other channel providers. Roku makes a bulk of their money via ads. Typically when they get an advertiser once, they tend to be repeat customers. In fact, in their most recent quarter, 97% of TV advertisers that spent at least $1 million in 2019 continued to invest in them in 2020. They also make money from licensing agreements with TV brands and service operators. And of course, they make money from selling their Roku players at retailers like Best Buy, Walmart, and Amazon. If you've ever noticed the Roku remote has a Netflix or Sling button, those companies pay Roku to be able to advertise their brand on their remote. Roku really gets how businesses want to spend advertising dollars in the 2020s. They're not spending as much on traditional TV these days. In fact, in their most recent earnings release, they highlight that during the C19, this only accelerated the shift away from traditional TV, and they've actually seen a 43% year-over-year increase in the amount of accounts, and they've also doubled the amount of viewers on their Roku channel. The Roku channel offers free movies, TV shows, sports, and live news. By now, you figured out that anytime free is mentioned, that means that ads are running. Ads may be annoying, but they help pay the bills. Now let's take a look at this massive growth that Roku has had just in 1 year, going from 32 million active users to now 46 million in just 1 year. That is a ridiculous 43% year-over-year increase. Being able to grow your business that quickly means you are doing something definitely right. And as you would expect, the streaming hours have also went up considerably, going from 10 billion hours in Q3 of 2019 to now 15 billion in Q3 of 20. That is a 54% year-over-year increase in the amount of time that people are spending on Roku. So this either really means that people like their Roku device, or they just like to do a lot of Roku and chill. Or maybe just both. If you've ever wondered why Netflix asks, "Are you still watching periodically?" It's actually so they can get a better gauge on how many actual hours are being actively watched instead of someone just leaving their TV on. Their average revenue per user has also increased quite substantially, going from $23 in Q3 of 2019 to now $27 in Q3 of 20. That's a 20% increase in the amount of money that you're making per a user. Imagine if that was able to keep going up. Really able to scale this business using this business model. This means they're able to bring in more money per person, which is going to be great on their margins. When we look at how revenue is split up, it's mostly from their platform segment, i.e. being able to sell ads, and royalties from their middleman activities, and of course a small part of their revenues is the amount of money they make from selling their Roku players. Gross margin, which is the difference between sales and costs associated with producing the goods sold, is a very impressive 61% for the platform, but it's actually only 15% for the player. So I looked into why this was, and according to their 10K report, it actually says that gross margins for players will be lower because of the pricing advantage that they try to give. Remember, they're selling these devices for relatively cheap. Their lowest model is only $29. Essentially what they're doing is that they're selling their Roku players at a lower cost to get people into their system, even if it means it's at a lower margin. Because once you actually have them in the Roku system, they can strategically make much more money off of you in the long run with their ads, which offer them much higher margins. This is very similar to what happens when you go to a fast food place and then you start ordering off the dollar menu. The restaurant knows they aren't making that much money when you do that, but if they can entice you to visit, chances are you might now order the more expensive items with larger margins, like a Nachos Bel Grande or a large Baja Blast drink. Suddenly, it was totally worth having those low-cost margin items to get you into the door. We can also see their adjusted EBITDA is finally a positive number. Anytime a company can actually make money these days, I see that as a huge plus, though it seems like for many meme investors, they don't care about that at all. But one investor we all care about is the legendary Cathie Wood and her Ark Invest team, who absolutely love Roku. This is actually their second largest position. Think about that. Out of all the nearly 55 companies that Ark deeply analyzes and researches, only one does her team believe is more valuable than Roku, and that would be Tesla. So pretty high competition here. They actually own about 4% of all Roku shares outstanding. Roku makes up nearly 7% of Ark's holdings itself. We can see here, since Q3 of 2020, Ark has been aggressively stockpiling the amount of shares of Roku it owns, going all the way up to now 4 million shares of Ark Invest as of the time of this recording. And during the same time period, the share price of Roku stock has also just continued to increase and reach all-time new highs. Roku is currently part of Ark W, which is the next generation internet ETF. So this one tries to get exposure to AI, big data, cloud computing, cybersecurity, and blockchain technology. So not exactly sure where Roku falls into one of those categories. And we know Ark loves to invest in disruptive technologies. Roku was an early pioneer in disrupting regular core TV with its streaming features. That's not to say that there isn't competitors in this space. You have Apple TV, you have Google, you have Amazon with their Fire Stick. Though Roku focuses more on hardware sales than the subscription-based model that the others try to put more emphasis on. TVs are found all around the world in just about every household. There is a very large opportunity for Roku to be able to tap into this particular market, as people love watching TV shows and film, and it doesn't have to be on regular TV anymore. And it's not just viewers that are retreating, it's advertisers and their checkbooks as well. Marketers are reallocating budgets from traditional TV advertising to TV streaming. In fact, in their most recent quarter, Roku ad impressions, which is basically when an ad is successfully placed in front of its viewers, rose 90% year over year. Companies that ran their first ads on Roku increased 2x year over year. And if you need any more convincing, if everything I said prior to this was not credible enough, just know that DraftKings has tripled its marketing budget with Roku year over year. DraftKings sponsors like everything. You know you've made it in this world if DraftKings is sponsoring you. Roku continues to make strong pushes in international markets, including double-digit year-over-year player sales growth in Canada and the UK. Roku just acquired Quibi's multi-million-dollar original programming portfolio that will showcase more than 75 shows that will be free to stream on the Roku channel. It seems like the company is really firing at all cylinders. It's even making acquisitions still. Analysts really like this stock, but that doesn't necessarily mean it's trading at any sort of discount. A lot of success has already been priced into this stock, and it's going to have to live up to all those expectations. Most analysts still think Roku is a buy, and even more impressive is only one person thinks that it's a sell. Over time, we can see here that the price consensus just continues to go up, and it goes up by a pretty big amount every 30 to 90 days. So no doubt, after looking into the fundamentals of this company, I can see why Ark loves them so much. Just remember, when buying Ark K, you are getting pretty big exposure to Roku. So if you're also planning on buying individual shares, you might be overweight in one particular company, which is always a risk. Right now, Roku's doing great, but there's no guarantee that it's gonna last forever. Let me know if you use Roku at home or what your thoughts of the stock are in the comments below. And don't forget to subscribe if you haven't already, as I will cover more Ark Invest stocks in the future. And I will buy, stash, collect cash you later.